Good evening, 5-9 Podcast, Robert McTyre. So glad that you guys are here to join me. Uh, Go ahead and subscribe and leave a comment. Like I say, I have this we're going to go one more again. I recorded a previous podcast, and well, there was some technical difficulties, so we're going to do this again, and we're going to do it right. Uh, so basically, to update you, Gavin Newsom approved 51 tax incentives for 51 movies that are currently filming in Los Angeles. So we're going to see how that shakes out. I am currently a dues paid up member of Local 728, so I had to, pay my dues not from doing any type of satellite work, but doing other stuff. So I would like to see my investment pay off. So speaking of investments, I want to talk about the stock market. Um, so really quick, so with the entertainment industry, because our business is so up and down, it's good to, I would say, have money that you can put into various companies. And by the way, I'm a baby investor. Please don't take what I say or my suggestions. These are solely my opinion. Do your own homework. Because, like I say, if you go in and you invest in something and you guys lose money, I'm not responsible. Okay, we're all adults here, but I'll give you my informed opinion, but it is by no means, I encourage you all to do your homework. Um, so I would encourage you to um, pick up this book, Stock Market Investing for Beginners. This is a very good book. Please, I know it's backwards, but it says Stock Market Investing for Beginners. Trust me. Uh, so basically, I'm more of a long hold investor. So basically, my goal is to buy. What you want to do is don't buy. Um, you want to the idea is, which I don't is to buy low and sell high. Um, but what you want to do is try to get a really quality stock for a good price. So basically, like I say, some people, tend to wait until certain stocks go to a lower price to, but some are at a lower price and sometimes you can wait a little too long and it'll go back up. Um, And basically, what stocks are is you're buying. So imagine a company, right? And this has been going on for since the 1700s, where a good way to um, and for companies to increase revenue is to sell off shares of the company, and people own a certain share of a company, and once that share, if the company expands, you get a dividend, a certain percentage, because they're using your capital to invest and expand. So, um, so not all companies are created equal. Some are, cheaper, some are more expensive, and there are growth companies. And some companies are so big that their stocks are split into, like, like for Google, there's a Google A and Google B, Berkshire Hathaway. There's some different stock offerings. Not every company is public. Like for example, SpaceX. That company's not isn't public yet, but it's going to go public at some point. Um, because when a company is public, they have to start to disclose, certain information and, stuff for investors. If you watch Shark Tank, what you want is, I think the thing that you are most interested in when considering investing is the company that you're investing in. How do they make money? And not just make money, but how do they scale? I, considered investing in AMC Entertainment, but the problem with, I love the movies and all that, but I really don't understand what their plan is as to how they're going to get people back into theaters and how are they going to not just, you know, you invest in them, but you don't want to just invest in a company. You want a company to bring you more money. Um, and so that's what I'm thinking. It's like things like that, you know. But what you want, there's an old phrase that dope dealers use is good crack sells itself, you know. Um, so what that means is like, you know, you want to have people who are locked in, like health insurance. You want to consider investing in the various health insurance. Cardinal Health, Cigna, United Health. Um, you might also want to consider investing in defense, aerospace, like Raytheon, Lockheed Martin, you know, those are companies where they have to do with your overall defense and protection. Um, Also, there are high tech quality, AI and technology stocks. There, ones like, there's a big one right now called NVIDIA, which is they're building all the semiconductor microchips that are going to go into all the AI and, you know, um, uh, quantum computing is definitely coming on the horizon, which are quantum computers that can do multiple calculations and autonomous vehicles. Like for with like Tesla. Um, so like I say, companies like that are growing, and um, social media like metaverse. Metaverse is definitely. I just recently invested in metaverse, and um, metaverse right now is their stock is about 580 at their peak. They're expected to go to about 700. Um, but like I say, there are certain companies like Apple which are stable. Then there are certain companies like we'll say like your Virgin Galactics who the idea is that they're basically a penny stock. They're like 300 $3 and 40 cents at this $4 at this point. Um, they're expected to start opening business next year. So, that's what I mean by investment. I I basically, my goal is to like buy one share. I guess I'm more of a stock collector, I would say at this point. Um, because like I say, like what you don't want to do is say you like Walmart, right? So you decide I'm only going to invest in Walmart. So you decide to buy like, Walmart's what we'll say it's $60 a share, right? So you decide you want to buy 1,000. So when Walmart has an off day, that 60 becomes 40. You know, Maybe during the holidays, that 60 could become 70. You know, you may have made a profit or lost a profit, but I encourage you to kind of like I say do your homework because like right now Costco is a huge driver. BJ's is really coming up. I think you guys should really get on BJ's because what BJ's and the difference is what BJ's and Costco is those are when those they have programs where customers have to sign up for a card and so they're locked in. They don't just have customers in order to get their discounts. They have to be they have to pay a fee. So you're kind of a club member. So with that model, they have essential things but at a discount. Quality you can buy in bulk. Um, so what that has done is like that has definitely run up the company value. So right now, Costco at its height was $1,000 a share. Now, with the tariffs and that sort of thing, it's down to about $900. So it's kind of fluctuating between there. But I have to say one thing is that the market is full of volatility. And what you want, you know, you have to consider and think of the market as a Olympic marathon. And think of the stocks as runners. So certain stocks are going to go to the front of the pack and they're going to stay at the front of the pack more than likely. And then you're going to have your stragglers, you know, who frankly aren't that good, but you have to look at it like, yeah, what I'm saying? Because like I say, a lot of the companies like that are producing semiconductors, you know, when AI really takes off, you really want to get in on the ground floor. Another thing you should probably look into is cybersecurity. There's Okta, there's CrowdStrike, um, because as the AI, we become more AI dependent, and we start doing, building more servers, and server farms are going to be big. Uh, right now, Apple's investing in developing server farms, and between server farms and the water that is going to be needs to be, used to cool these farms, and the personnel that's needed to be hired, everybody from janitorial to technical, to manage these farms, because AI is going to be such a big thing, you should definitely look into sort of the causality and, you know, um, look at, various companies that, um, you know, that can be affected and be effective and, profit from it. So, what resources am I using? Um, I'm using various resources. Like, I mean, Instagram has been really, really good. Uh, believe it or not. There's Instagram, there's obviously YouTube, there's Google, um, you know, law enforcement, stocks in law enforcement and defense. Um, but but I would definitely say it's always good to do your own homework, to research, to you know, but definitely I will say from my experience, since I started investing, I say I invested in Celsius. And I bought Celsius at what, $27, and now it's up to like $31. So my goal is to well, to hold these stocks until about maybe 5 to 10 years, but I think I'm going to go longer than that. Because like I say, right nowadays you can't rely on Social Security to be something that's going to help you with, it's nice to have a company, but anything can happen. You could lose your job, um, anything, medical expense or whatever the case may be. Um, so I think that in and of itself is a good, because you have to consider inflation. Um, because just because the stock right now is what, two, we'll say right now Tesla is at 235, down from its height, which was trading at 436 $436 a share. So you have to consider inflation, because right now the market is down. And the reason I emphasize you should really look into getting into the stock market now is because the market is down. Trump is doing he's incorporating tariffs and the stock market, and there's rumors that there could be a stock market crash. Um, but you need to look at it as like it's more of a Black Friday for people who want to buy stocks, because you're buying high quality stocks at a very low price. Amazon, Google. I picked up Amazon, Google. Um, I picked up Metaverse. I'm looking at, definitely want to get me some, Tesla, Apple, Microsoft. Microsoft is a big one because for like definitely cloud-based services, Microsoft is trading at $384 a share, which is bad down for them. But once they, lock in and get their shit together, part of my language, um, they're going to go up. So you want to be the person where you sat down and thought about it when it's $384 versus like it's at 800. That could have been, you could have got something cheap, and why would you buy it, at a higher rate? So, so it's like, so definitely health insurance. Health insurance is, Cigna. That's your Cignas, your Pfizer's, your Johnson and Johnson, Becton Dixon. They're one of the big three when it comes to developing syringes and hypodermic. So during the next pandemic, that's the company that's going to be leaned on to, develop all the syringes and stuff like that. Stryker is a very good medical company. You should probably look into. Um, believe it or not, there are other companies outside tech. You believe it or not, Domino's has really been killing it because people love cheap, good pizza. Little Caesars is nowhere to be seen. Okay, and there's a reason for that. Um, so Domino's, McDonald's is a very stable company. Um, I feel like they're it's poison. These places sell these horrible food, um, which are of course driving up probably hospital costs because they're giving people diabetes and whatever. But I'm not going to go there. Um, but these companies are solid. Um, you know AT&T, Verizon, um, Procter and Gamble is pretty good. Um, so it definitely, there are some dividend aristocrats. And what are dividends? Dividends are like, uh, that's sort of a reward to for the investors. That so basically, um, if a company makes money, right, you buy stock at a certain for so their way of help of thanking investors is, you know, they'll give a dividend. So you can, I'm, don't quote me, but I believe how it works is you can, they, um, they pay the investors, and so I guess you can funnel that money back into your account. Um, but that's what it means, like dividends. So you're being rewarded for holding on to the stocks, and but like I say, if you don't like a particular stock, you can just sell it, which means is you sell your position, so you hold one share of, we'll say, Amazon. You decide you don't want Amazon, you sell it back to Amazon, and you get your money back wherever the market value of the money is at. You know, so I guess it's interesting with the idea of market value. When I went to Red Lobster and snow crab legs are like market value. Sometimes they're higher, sometimes they're lower. The market is just like that. Certain stocks are higher performers and they're higher. And then you had to consider there are limited shares of a company. So, you know, there isn't an infinite amount of shares. And then when you get, but sometimes you get companies that are so greedy, they'll end up diluting, they'll offer more shares, right? And when that happens to the value, it starts to dilute because there's like so much just floating. So it gets really like, interesting, how this whole works. But the last thing I'll say is that if you do invest, know that the Nasdaq, the market opens at 7 a.m. on the East Coast. So I guess that would be what, 4 a.m. on the West Coast. So that's when you can start trading. Um, there are various platforms. You don't, it used to be you needed a broker, but you can do it online. So Schwab, I opened up an account with Schwab because I felt like it was definitely more user friendly and they have customer service to, answer your questions. Um, and I really liked Schwab, but I really had a problem with transferring money because there's a 6 to 5 day wait to transfer money. You don't have instant transfer. Um, so basically, I would transfer money and I would want to get certain stocks and the money wouldn't be there because they're still waiting on for the bank to transfer the money. So that was really like that defeats the purpose, right? So Robinhood, I've been going with, and it's there's barely any customer service aspect to it, but it's very simple. It's for like you can buy fractional stocks, fractions of a whole share. Like you have $5, you can get $5 worth of a particular share. Um, I prefer to get, yeah, at all, if at all possible, get the share. You know what I'm saying? That's just my personal preference. But with Robinhood, you can create a list of stocks that you're interested in, and it can organize that list from the most expensive to the cheapest, or the cheapest to the most expensive, um, which I like. You can kind of make informed decisions on, maybe what stocks you might want to prioritize over others, or make so but there are very fewer resources, and you can, if you're into crypto, it's easy to purchase crypto. So I would say go with Robinhood. Um, it's just down and dirty, no frills. You got the money, you transfer it, you pick what you want. At when it's 7 a.m. East Coast, you can do that all day. Um, and then, like I say, and that's pretty much it. So I will definitely say, get in, and I'm going to, let's see. Uh, let's see. I see I have some questions. Chaz Duckett. I buy and hold S&P ETFs. Heck yeah, smart man. That's the homie back then. Me and Chaz Duckett go way back to high school, and very proud of that guy and his lovely, amazing wife. Mrs. Duckett, and you know, you guys have really been really cool. But yes, ETFs are. If you imagine like you go into the supermarket, right, and there are a basket of particular stocks that are kind of pre-selected, um, that are that are winners pretty much. Um, I have my own preferences. I mean, there's no right or wrong way to do it, or you can also pay somebody to invest for you. You know, that's kind of similar to how how retirement funds work. Is you pay people, and they reinvest and invest your money in the right places, and bada boom, bada bang, your retirement is taken care of. Well, they kind of take the sort of the leg, the work and the reading and the watching of the news and all that out of the equation because they're presumably the experts. But but again, you have to be plugged in. I like knowing about companies because it's sort of a microcosm of human behavior and um, so it's fascinating to me. But like I say, entertainment business, you gotta be multifaceted, and you gotta, when you come into a lot of money, you know, I think saving it and putting it in a bank to save it is that money isn't working for you, in any way, shape, or form. I don't think is the right way to go. You should definitely find ways for that money to work. Passive income, maybe like open. I thought about this, like getting a vending machine. Just have to figure out where you're gonna put it. Opening a laundromat, or you have to find ways to make money work for you. So with the stock market, the money isn't just sitting in a bank, you know, at a pathetic amount of interest versus like you can invest it into something, you know, and the interest will be more active. So, um, so I'm going to conclude this podcast. We're going to have they're definitely going to go back to doing reports from the Hollywood trenches. I've had some incredible interviews so far. Most recently, like say with Mr. Harry Smith, who gave us an incredible interview, and I got some ones that I'm working on, and it's going to be great. But thanks for rocking with me so far. Appreciate all the love and support. This is uh, this is your boy LA Rob signing off. See you guys in the future. Take care. Have a great weekend. See you next time. Peace.